3 different levels of mortgage pre-approval that you need to be aware of. This is such a confusing topic, and I always want to make sure that I clear this up for anybody that's looking to buy a house in the United States. The first level of pre-approval is not even really a pre-approval itself. It's called a pre-qualification. In this instance, what's going to happen is that a loan officer is going to ask you for a loan application to be filled out, and maybe not even that much. But what they're going to do is they're going to ask you about your income, your assets, your credit, and your liabilities. Those are the 4 things that are going to go into a mortgage pre-approval. And so you're going to give them that information, and what they're going to do, either through the loan application or through the information that you provide, they may or may not run your credit. They're going to look at that information and they're going to try to make an estimate about how much they can determine that you qualify for based on those numbers. They're going to move the numbers around to make sure that they fit with inside of a puzzle to see what it looks like. Now, this is great if you're just trying to get an idea of what it is that you qualify for, but it's not going to be anything that's set in stone, especially if you were going to go out and make an offer with just a pre-qualification. There's not a real estate agent in the country at this time who would probably look at that and go, yeah, you're great. You must be a good buyer. When you're not even really pre-approved, you're just pre-qualified. You just have an idea of what it is that you qualify for. Okay. So pre-qualification is number 1. That's what a lot of people, a lot of lenders do out there to determine if you're ready to buy a home or not. The second level of pre-approval is what I would call an AUS pre-approval. Now, what does that mean? AUS stands for Automated Underwriting System. So in this instance, same type of deal is going to happen. You're going to fill out a loan application, and on that loan application, you're going to, again, enter your income, assets, credit, and liabilities. And then a mortgage person is going to run your credit. Okay, they're going to make sure that you have the appropriate credit to be able to qualify for a loan. And then they're going to ask for some documentation. They're going to ask for things that verify your income, your assets, your credit, and your liabilities. And so the documentations, once those are provided, they're going to cross-check to make sure that those numbers match up correctly. And then they're going to run it through what's called the AUS, the Automated Underwriting System, that's going to determine if you're eligible to get a loan for the particular program that you're looking into. There's several different automated underwriting systems, depending again on what type of a loan that you use. Now, this, I would say, is where most lenders go in order to get you pre-approved for a loan. Now, it's great, but there's some things that could be wrong with it, especially if you have different types of income. Let's say you have overtime or bonus income, and the verifications that you have given the loan officer to try to qualify, maybe they don't have the numbers broken out into how much you actually made in bonus or how much you made in overtime. And maybe you don't have a 2-year history, but you've included that in the actual loan application itself, and the verification from the loan officer didn't have that information broken down. Well, those numbers can be manipulated because there's certain guidelines for qualifying or using the income to qualify. And if you don't meet those qualifying income guidelines, then you may not be able to get a mortgage in reality when the automated underwriting system gave you an approval in advance. So this is a really good step. You want to get to at least this point if you're going to try to buy a property and you provide a pre-approval letter from the lender to a real estate agent that you're trying to put an offer in on a property for. I like to take it one step further, and the last type of pre-approval is called a fully underwritten credit approval. In this instance, what we're going to be looking at, again, is loan application, income, assets, credit, liabilities. We're going to collect all documentation, not just some or partial parts of your documentation. And we're even going to do some verifications. We're going to look into your income to make sure that it's broken down appropriately. We're going to look at your asset statements to make sure that there's no large deposits in there. And we're going to dive really deep into making sure that you apply for the correct amount of credit in order to qualify for a loan. And then once all that stuff is ready to go, we're going to actually submit it to the person who makes the ultimate decision as to whether or not you get a loan. That person is called an underwriter. Ooh. Those people are the people at banks that look at your credit profile to make sure that it fits within the guidelines of whatever loan program that you're using. because the last thing that a bank wants to do is to write a bad loan. They do all this information check and background check and all sorts of things for you. They figure out what type of blood you have. They go really deep like that. And then they find out something is wrong and they're not able to sell the loan on the secondary market. Well, they have to eat that loan, and that's really, really expensive for banks to be able to do that. So they want to make sure that if they're going to give you a loan, they have all their I's dotted and their T's crossed to make sure that you are well qualified to be able to get that loan. So any home buyer, I would say, currently needs to have a fully underwritten pre-approval to compete in today's market. And the reason being is that it's still, after all this time, a seller's market out there. You still have lower inventory levels, which is causing buyers to compete. And you need to make sure you're in the very best position possible to close on a loan quickly so that everybody in a transaction can get what they're looking for and make sure that the deal closes on time, smoothly. And we want to make sure that on our side, we have home buyers and borrowers for life. If you have any questions at all, please feel free to reach out to us. And thanks a lot for listening. I look forward to chatting with you really soon. Have a good one.